Great. Now, let's start with alimony payments. There are 6 requirements. Payments have to be made in cash. They must be made pursuant to a divorce or separation agreement. The decree or agreement can't designate the payments as non-deductible by the payer spouse. What are the other requirements, Barbara?
Well, the spouses have to live apart. There can't be any obligation to make payments to the payee spouse after his or her death, and the payments cannot be child support.
Okay, so let's look at 2 recent developments. In one, the requirements that payments be made pursuant to a decree or agreement was a slip-up. Tell me more.
Well, you have a common situation where spouses are in the midst of a divorce and they just can't agree on the amount of alimony. In this particular case, the spouse wanted $6,000 a month and her attorney drafted a separation agreement. The husband wanted to pay only $2,500 a month. And what happened was he started making the payments, but they hadn't finalized the agreement.
So he ended up making $36,000 in payments. Could he deduct the $36,000 that he paid?
No, the court wouldn't let him. He made payments for 2 years, but the court characterized these payments as voluntary because they were not made pursuant to a decree or final agreement.
So he was not legally required to make those payments?
That's correct. They were just voluntary.
Well, the other situation involved a different requirement that payments not be child support. What happened in that case?
Well, it can get confusing when a person is making payments of alimony and child support, and it gets very confusing when that person is in arrears.
So, Barbara, can you review the rule for our viewers?
Any arrears that are made are applied first to non-deductible child support and then to deductible alimony. Well, in this case, the father, according to the amount of arrears that he had and the payments that he made, all of the payments were applied to the non-deductible child support, and he couldn't take any deduction for alimony. And what's to add insult to injury, he was socked with a 20% penalty. He had had a CPA prepare his tax return, and I guess the bottom line is the CPA should have known better.